Hey guys, Luke here. I'm going to take you through a trade example that really highlights something that has been a bit of an aha moment for me over the last couple months, and that's how to be wrong and express a trade idea, how to be wrong and still make money, how to still be profitable on your trade. So the trade was NKLA. The trade was on Friday, on June 12th. I'm just showing you. I'm hiding the Friday candle just to show you when I saw it Thursday night when I was doing my scouting for the next day trading. What I saw. This ended up being the perfect golden pocket retrace from, I believe it was from here. Let me just throw that up real quick. This was something, admittedly, I've noticed after the fact this morning when I was looking at this pullback, and maybe some potential indications that would have given me an idea of to buy here, other than just the EMAs, which have historically been a good area, especially after an all-time high rip, to look for potential support and dip buying. So in the future, I think I'm gonna continue to use the fibs to potentially scout those retrace levels as for entry zones. Here Thursday night, I saw this. So we're looking for a daily higher low. We had ripped to all-time highs. This is a sympathy play where people that had originally missed the big Tesla run up, maybe thinking I could get early in this play. So we see significant volume, above average volume, heavy selling into between the 90 and the 100 level. Bulls bought the dip initially, but still we saw continued selling pressure. Well, also noted a short report from Andrew Left and Citron that came out a couple days ago as well. So what I saw was, into the morning, I woke up and started to make my coffee, and I saw this. So this candle didn't exactly look entirely this shape, but this was the candle I saw. We saw price try to approach the 68.99 level, a resistance from the day before, and reject. So I thought, okay, well, we're looking for a daily higher low. Maybe we can get in on some consolidation here before eventually retesting that 68.99 level again. So look to the hourly. And I saw this look. I was about here is when I started watching it. The candle was a bit more like a doji, I believe. It wasn't this full potential, the selling pressure. I did note the selling pressure, though, as this candle continued to form into the pre-market period, which wasn't, the most constructive look. Ideally, we would want to see bulls building a base of support around these EMAs and the ability to, before retesting the 68.99 level. So I thought, okay, there's an initial area where we want to be looking for an hourly higher low here near the EMAs, but being open to the fact that it couldn't really be anywhere. It could be here, it could be down lower, anywhere in this range of the 63s down to the 58s. That's what we were looking to potentially change this hourly trend, confirming that this is the daily higher low. The hourly trend change confirms the daily higher low, and then the 5-minute that we're going to look at in a moment here, is that a 5-minute trend change would confirm the hourly higher low and confirm that we have a decent entry. So again, looking for an hourly higher low, saw this upper wick of profit taking on the initial bounce pre-market as an initial caution zone. And I usually run my charts in quadrants. So you have like a daily look here, hourly, 5-minute, and 2-minute. But for this example here, I wanted to focus in on one time frame at a time. So we had this. Let me throw on you up. We had this look here. Let me see here. So we were in here. I started watching around this level, around this period here. I think I was at my desk for 5:25ish. I saw this formation. So we have your low, high. You have a lower low, no follow through on the 64 price break, and we see prices kind of coiling around VWAP. So with the hourly look, this was the wick. The candle wick that we wanted to be careful of. So we saw significant selling into the 68 area, $68 level. So if bulls were going to come up, I thought, okay, we would definitely want to break and hold that and see if there's any notable selling before we would eventually test and hopefully break the 68.99 level. Because if we could see some bull movement, there's some pretty significant move there for a good return. So if we could in fact change this hourly trend on this day, on Friday, with breaking over the 68.99 level, breaking and holding it, there's a significant lack of resistance up here in the mid 70 level, and I thought we could get some great returns. So a really good risk reward if we can get an appropriately sized and zoned entry for a day trade. I was not looking to swing this, given the way that SPY was starting to shape up, which also played a factor in what's coming up. So we saw this consolidation zone under the VWAP. I was watching the tape. So the tape is, for people that don't know, is the time and sales module that you can add to Questrade, my broker of choice. I saw on the bid, I saw any selling pressure was pretty much immediately bought back up, and prices were holding a certain price level. I entered my first entry. What was it? My first entry was at 65.35. I limited in with a half size position. The reason being is I reasoned if we were unable to hold the 64 level, where we have seen some buying before in this pre-market level, I thought, okay, I would want to wait for that hourly higher low to shop for maybe 5-minute oversold conditions into regular cash open or something like this into later in the day, so that it could be a bit lower than I had originally anticipated, and that this is not where the hourly higher low was. So something I constantly tell myself is being early and being wrong is the same thing, or feels the same. So I could be wrong that the hourly higher low is here, and I would want to be appropriately waiting for the right entry. So I was half in at 65.35. Bids were being held. Price was being held up. We saw price started to advance. So at this point, the tape was reading very strongly for the bulls. The offers were being taken out. There was a few walls where price was stalling around VWAP, some fairly large walls that were holding and that were refilling. But the bulls kept taking it out at the offer. So at the price that the bears were willing to sell it, bulls were accumulating and taking up pretty much everything that was being trying to be pushed the bids down. It was all being accumulated. Prices started to advance quite heavily. I was in at 2 points here. After I saw the initial strength, I added a second lot at again 65.35 in for a full size position. Another quick comment is pre-market. I usually trade with less size. Because I have less control. You have to your orders are typically, because I use the GTEM sell feature or buy features instead of limit orders or market orders. They aren't allowed for selling on Questrade. So what I'm trying to say is I can't use stops. So my stops are basically manual with the price action. So as price started to advance, I reasoned, okay, so we want to test the 68.99 level. We know we're going to need a 5-minute higher low. Price is broken and held above VWAP. We see strong tape buying. We see almost no selling at this point. Price advanced to mid 60s, mid 66s. We saw a huge sell order come in. So at this point, a lot of the orders that are being transacted on the tape were like 100, 200 lots, and then odd small lots in between. Maybe the odd 500 share lot. There was a 6,000 share lot or 5,500 share lot that was sold on the bid. So significant sell, and that started to give me a red flag. Okay, there is at least one big seller that's coming up. Another thing that I've noticed in my trades is the biggest risk of trading pre-market to cash is in the transition zone. As you go from pre-market to cash, the volatility goes through the roof, right? Like as cash open occurs, much more traders and algorithms and bots are trading actively, so you see a lot of volatility. So at that point, it's very difficult if you're running a manual stop until you have a price level to set a more automated stop level. It can be very volatile and you can get trapped in positions and it can be kind of uncomfortable. So I reasoned as we started to advance, or actually backing up for a second, when I saw that big order, the big 5,500 share lot come in, I got a bit nervous, so I covered half, or I took off half my position. Reason is we saw good advancement from my 65.35 entry, and my stop, a psychological stop, was I was under the $64 level. So at 65.35, we had about $1.35 risk. As we saw price advance, I sold half to be protective. That significantly dropped my risk. I still wasn't risk free, but at least I had a half size position. So if price was starting to pull back, I would have cut the position anyways. Nonetheless, price I was advancing and was holding even after that big sale, but the buying pressure at this point was starting to dry. It was not nearly as significant as it was on this initial run up. We wanted to cash open and we saw the buying completely stop. We noted the 68 price level from the morning. and we saw basically no buying into it. So I sold my entire position, thinking we were either going to test and break the 68.99 level, and at some point I knew we were going to consolidate, even if it was on the 5 minute, because we were already approaching nearly overbought conditions going into cash open. So I thought I would be more comfortable missing this initial move and buying on consolidation than that initial volatility I talked about that occurs from the transition zone of pre-market to cash open, catching me and making me uncomfortable and messing up my mental state for the morning. So I was much more concerned about maintaining a strong mental position after this initial successful trade where you see 1.5 to 2% on the trade. So I sold half at 66 and I sold the second half limited out at 67. So that was a good trade. And then SPY started to pull back pretty much immediately. I think I might be speaking out of turn there, but I remember I was watching SPY and looking for either positive or negative correlation with NKLA here. Price started to sell off quite aggressively, so I was happy with myself, quite pleased as punch, as I didn't get caught in that initial volatility. So I was looking for a level to get long off of as a potential area to again keep scouting for that hourly higher low. 5 minute oversold conditions, 2 minute oversold conditions. These are areas where I would start to scout potential entry. We broke VWAP, tested it again on the preceding 2 minute candle, and had aggressive selling. This was quite quick, fast selling. We see big volume that coming in the opening frame. Then price paused, and the selling paused. And I was thinking, watching this 200 moving average. That's this green line here. It isn't always a bounce zone, the 200. It can act as a potential resistance or support zone, but really what I consider it is it's basically like the resting bench for the bulls or the bears. Price can certainly break through it and rip through it, but the greatest probability is that there'll be a pause in that area. And that's what we saw again here. So there was a pause in selling. Of course, we could have had a weak buying and then rip lower, but I saw the pause in selling in this waterfall action on the 2 minute, and surely that also would have been reflected on the 1 minute, but I wasn't watching that at the time. And thought, okay, if we can get long off this level, we may be able to retest the 67.59 level and the 68.99 eventually later in the day. Again, looking for this lack of resistance, and that would be a pretty significant move for a day trade. So there's a great risk reward there. And even still, I reasoned we could sell partial into any bounce, as we're just looking for a 5 minute lower high, because we have not confirmed a 5 minute uptrend, confirming our hourly higher low. So I could get risk-free quite easily. So the risk-free trades is really how you can be wrong in your thesis of this isn't potentially the hourly higher low we're looking for, but by selling half, we ensure that that our position is still effectively protected. So we entered long at 63.48. I marketed in. Because this was happening so fast, I didn't have time to enter a limit order. I would rather just act and then look at my execution and then consider where I would want to sell half to de-risk. So I entered here. My stop was under 63. I saw a big wall of support at 63. So I think my stop was 62.95, giving me a couple cents for wiggle room. We saw this advance into VWAP. And at this point, I was focusing more so on the 5 minute because I knew we were just looking for a 5 minute lower high on any bounce. Let me get to the right time here. So this is the rejection. This is the dip buy off of the 63 support. The 5 minute 200 is just below it. I would have started to look at that area as well if we saw continued selling pressure, or for 5 minute oversold. We didn't get there. Bought off of the 63 support. Stop was underneath. Great. So I immediately put my stop in. Then price started to bounce and I canceled that stop to sell half into this bounce. Reason being, we were approaching VWAP, which I noticed in pre-market was acting as a fairly significant resistance before getting over. We broke below and was initially retesting it. And we saw this upper wick of profit taking. So I was more comfortable selling half, putting my stop under, and then maybe finding a look within the rest of the morning shape up to re-add that position and then to be a better size for a potential bull break. But nonetheless, we sold the first half of our position at 65.38. Again, marketed out. So we were about here. So as price started to bounce, we set this 5 minute lower high just by a few pennies. Really lack of any follow through from the bulls, and was unable to really get and stay above VWAP. So I was getting a bit anxious, or not anxious, I want to be protective is a better phrase. So I sold half my position, and at that point, my entry was 63.48. My sell half was 65.38, so about $2 of profit on the first half. My stop was under 63. So at this point, my risk is nil. Even if we broke the 63 level, confirming that I was in fact wrong, this is not an hourly high or low, I'd be profitable. So that's how you can be wrong and still be profitable. Something that I keep telling myself is being wrong and being early feels the same. So in this scenario, we would just, if it broke bear, which eventually it did, I'll get to in a minute, but that's when you just start to look for, again, an appropriately sized and positioned risk-reward trade. So saw this pullback, sold half. Price was rejecting VWAP for the rest of this morning frame. I was watching this quite closely. I was watching SPY and saw notable weakness as QQQ, XLF, XLV. We saw some significant weakness kind of starting to form in a number of different sectors, as well as watching some of the TCG group that I was trading with. A lot of people were looking for potential bear looks as the market started to look weak. As it started to roll over, I was noticing Nicola was holding up actually relatively well. So bulls were playing defense, as any dip was not being sold into as aggressively as we would expect with how hard SPY was started to sell off into this period. So I thought that's a positive look, but the VWAP was a significant resistance. Anytime the price started to advance into VWAP, I did see notable selling into those areas by watching the tape. My exit, I decided to exit early, which I very rarely do, but because of the weakness I saw on the tape and the inability to break and hold above VWAP, how I played it is I decided to take my second half at 64.40. So I sold my second half right about here, 64.40, right around this level into VWAP. The reason being is I thought we're either going to break above and hold VWAP and we're going to rock it into test to a new high a day, or we're going to break down significantly. I didn't want to play the short look because I knew we were still looking for an hourly higher low, and we had already came from a decent area as we opened higher up in the 69.50 level. So I didn't like the risk reward because I didn't think we were going to see a huge amount of follow through if and when bears broke, because we were already holding all morning while SPY was dumping. So I ended up shorting Netflix because that was a comparative it was a much better area to short because of the risk reward. I would have re-entered long in this position if we saw a break and hold above VWAP. So I actually had a stop order at 64.78, I think, above this little level. So if we saw break and hold VWAP and above that price level, I would have used that as another bull entry. So I was being protective and being pretty profitable in the trade, while still being ready for both scenarios. Either we broke bear and I was going to be out of my position, or we were going to in fact break bull and I was just going to miss out on 30-40 cents of the move, but I would still be back in for this limited resistance play to the long side. So that was my trade. It was a fairly profitable trade, and the best part is the lack of risk that I had. So that's my trade review. If you have any questions, feel free to put them in below, and I'd be happy to follow up with them. And yeah, that's it. So if you find this valuable, please like and maybe subscribe to my channel. I'm just getting it going here, so any feedback is much appreciated. Thanks so much. Have a good rest of your day. See you guys.